Hey everyone, welcome back to Corporate Decoder. Today, we're diving into a report from RedCloud Holdings, and let me tell you, it's a bit of a roller coaster. We'll see some impressive revenue growth, but also some eye-watering losses. You might say it's like a high-speed train that's running out of track. If you're new here and you enjoy getting the real story behind these corporate filings, make sure to subscribe. And don't forget to join our Discord community linked in the description below, where we can all discuss this further. So what's RedCloud all about? They've built a platform that aims to connect brands, distributors and retailers in high growth markets, especially for fast moving consumer goods. Sounds good, but let's see how the numbers actually look. We need to get to the core of this, we need to see the real numbers. Let's decode this filing. The company has listed its shares on the Nasdaq. Let's talk about technology risks. RedCloud relies heavily on Amazon Web Services or AWS for their platform. If AWS has problems, RedCloud has problems. Think of it like relying on one major highway to get your goods to market. If that highway closes, everything gets stuck. They have also limited point of presence, which can add latency issues as well. They also depend on Google Play and the Apple App Store for their Red 101 app. If Google or Apple change their rules or start favoring competitors, RedCloud could be in trouble. It's like building a store on someone else's land. They can change the rent or kick you out. Because AI is a developing technology, legal frameworks for AI governance are in their infancy, quickly developing, and unpredictable. The misuse of AI raises new ethical issues and poses a number of risks that cannot be fully mitigated. Now, let's talk about the elephant in the room, going concern. The auditors have flagged substantial doubt about RedCloud's ability to continue as a going concern. This means there's a real risk they might not be able to meet their financial obligations. This is a serious warning sign that should make investors pause. The company believes their current cash and cash equivalents, along with cash flow, will be sufficient to meet anticipated needs in the next 12 months. However, they also state that they might need more money soon, and getting that financing might not be easy or on good terms. It's like needing to ask for another loan when you're already struggling to pay your bills. Okay, let's get to the financials, which is the core of this filing. Here's where the story gets interesting. The company has rapidly grown since they launched the platform in 2022. For example, the number of active sellers on their platform increased from 276 to 760. Our business strategy also comes with significant risks, which makes it difficult to plan for future operations and strategic initiatives. The addressable market is truly enormous. This seems very compelling, but how much are they really spending to achieve this? Now they dive into risks that might prevent this success, and we need to pay attention. Exchange rates, particularly between the pound and the dollar, and between the pound and the currencies where they operate, like the Nigerian naira, South African rand, the Brazilian real, and the Argentinian peso, may hurt the business, so a global investor should really pay attention to that. This is never good to see. They might not be able to rely on the use of AI and machine learning for our platform because the output from these services is deemed to be inaccurate or questionable. Now, for the most critical piece, how are their financials actually looking? General and administrative expenses shot up by over 300%. Salaries, benefits, and contractor costs increased, but not as much as other areas, rising only 34.5%. However, marketing costs nearly doubled, with a 113.3% increase. This is a crucial point. They're spending a lot on marketing to grow, but is it sustainable? Product and technology development has also increased, and that's important to create real value. Let's see how they did. And here's the bottom line. Their net loss increased significantly, about 69%, actually to 50 million. And with it, to no surprise, did the losses as their interest expenses went up as well. This isn't a good picture altogether, but is there a turnaround on the horizon? Okay, how many shares they have? They need to have a lot of them for having such a long journey in the public market. So let's see how many they have. Who is running this company? As of December 31, 2024, options to purchase 375 ordinary shares granted to our executive officers and directors were outstanding under our equity incentive plans at a weighted average exercise price of 2 times £0 as each option will expire 10 years from the date of the grant thereof. As of December 31, 20 each option will expire 10 years from the date of the grant thereof. His option will expire 10 years from the date of the grant thereof. If things turn around, the UK City Code on takeovers and mergers may apply, meaning that any person acquiring 30% or more of the voting rights will be required to make a cash offer to all other shareholders. Lastly, here's how much they paid to the firm so we know it was not a free audit. Okay, now some final formality items such as signatures, etc. If some investors find our ordinary shares less attractive as a result, there may be a less active trading market for our ordinary shares and our share price may be more volatile. The company is concerned with cybersecurity, so any investor should be aware and consults industry best practices throughout to cybersecurity program. Now, let's step back and assess what all this means. RedCloud has shown impressive revenue growth, particularly in Nigeria and Argentina. However, this growth is coming at a high cost, as demonstrated by the significant increase in marketing expenses and overall net losses. The auditor's going concern warning is a major red flag, indicating potential solvency issues. One of their strengths is their management, but it can also be their greatest threat as key players might leave or simply might not meet the current moment. A major weakness is their over-reliance on cloud service providers and app marketplaces. If any of these services go down or change their terms, RedCloud's operations could be severely disrupted. Plus, the FMCG market in which they operate is very competitive. The competition has substantially greater financial research and development personnel and marketing resources than they do. Looking ahead, while there's potential in their AI and machine learning capabilities and expansion into new product ranges, the global conditions and exchange rate fluctuations pose significant risks. RedCloud needs to focus on managing its cost and diversifying its technology dependencies to ensure long-term sustainability. Alright, that's my take on RedCloud's latest filing. What do you think about these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.